Welcome back to Selling Your Business with David King. It is April 3rd, 2020, and we are in the midst of a global and national public health emergency, a pandemic, the coronavirus, COVID-19. Recently, within the past month, the markets have made a sudden and dramatic downturn, losing nearly a third of their value. Unemployment claims have reached record levels. Most of the nation lives under stay-home or otherwise emergency orders to mitigate this health crisis. In the meantime, small business owners need to be prepared to do what they do best, be the engine of the economy, and help spur this economy back to the previous healthy, thriving level that it was at before. And you should not completely abandon plans to exit your business. As I've stressed before, you always need to have a plan for exiting your business, no matter what stage you're at. If your plan to exit your business was to do it soon, you need not abandon that plan, but you're probably going to have to modify it. Keep your business afloat and don't give up your plans to exit your business. In the meantime, we all need to protect ourselves and our employees and try to prevent the spread of the virus. Implement technology to have a virtual office and maintain the same level of communication with your employees without being physically close to them. You need to reset your expectations for 2020, run a new budget, and see what you can realistically do in this year. You're going to want to identify ways to cut costs, of course, and one of those costs is going to be payroll, but you should be careful before making any sort of layoffs or terminations immediately here for a number of reasons. One, you're going to need to be careful to comply with new laws related to layoffs. Failing to comply with the law can be more expensive in the short term than making layoffs. So make sure you get advice and do it right. But in the meantime, you have incentives to keep your employees on board and employed. Congress has recently passed 3 laws, including the CARES Act, which are intended to stimulate the economy and provide relief for Americans to get you through this economic downturn. There is a number of different features under these CARES Act which provide tax relief to employers and to all Americans. The government has extended deadlines for filing and for paying tax returns this year. And they've offered new credits for employers for keeping employers on board. Speak to your CPA. You have the ability to take out up to $100,000 from your 401k without the usual 10% penalty and recognize it into income over 3 years rather than all in 1 year. People who have student loans can defer repayment of their student loans for a number of months, and people who have mortgages can defer payment on their mortgages, but be careful when you do that. Be careful about your mortgage. They may be waiting for you at the end of the deferral period with a bill for the entire balance that you've deferred, and most people would not be in a good position to make a large sum payment like that. So be careful about your mortgage. A few government loan programs are available to help you through this rough patch. One is the Economic Injury Disaster Loan Program. You can borrow up to $2 million at 3.75%. These loans are not forgiven. They can be used for working capital and a broad range of expenses. You can seek up to a year of deferment on these loans. If your loan is in excess of $25,000, you're likely going to need to provide collateral for the loans. Major employers, those with over 500, can seek more than $2 million in borrowing. You need to be able to measure your losses and quantify them. You submit the application directly to the SBA. Be sure that this is the best alternative for you. There is another specific loan program which a lot of businesses are pursuing right now, which is probably the most desirable, and that's the Paycheck Protection Program. Applications for a Paycheck Protection Program loan can only be submitted through a bank, and the federal government has promoted these as being available through all FDIC-insured banks, but that's not the reality at the moment. Generally, it's been difficult to even find SBA-approved lenders who are handling loan applications for businesses which weren't pre-existing customers. The key to these loans right now is number one, get on top of this and get an application processed. Number two, you need to find a bank to do that. The application itself is not that difficult. The difficulty at the moment is finding a bank to submit your application for you, finding a bank to issue the loan for you. The banks themselves will make the loans, and they're guaranteed by the federal government. They should be funded by the federal government, but it's the banks themselves that are issuing the loans. The loan can be for up to $10 million, and the loan amount is 2.5 times your average monthly payroll costs in 2019. And a number of costs related to payroll are included within your payroll costs, particularly if you have group insurance. You can add that in, and if you have any retirement plans for your employees, you can add that in as well. Get some help, look through these documents, but that's the big picture, is it's payroll costs, your gross wages, and it includes any sums that you're paying for group health insurance, and it includes the sums that you're paying in 2019 for retirement programs. So long as you use these sums over the next 8 weeks to keep your workforce employed, these loans can be forgiven. The principal balance of this loan will be forgiven so long as you use it for the designated purposes, which is paying your employees or paying rent and utilities. If you have a mortgage that's paid by your business, it only can be used 25% for non-employee related costs. But use it for your employees, pay your employees, segregate these funds, and make sure that you can show that the money was used to keep your employees paid, and they can be forgiven. Now, here's a key factor. There's only $349 billion available under this program right now. Do not miss out. Once the money is gone, banks will not issue more loans. June will be too late. You can go between today, which is the first day to apply, and June 10th is the drop dead date for getting your application in. June will be entirely too late. You can bet that all the loans, all that $349 billion will be used to fund other loans. So get your application in and take advantage of this opportunity to keep your employees on board. If you've already laid people off, bring them back. You can do that. Now, back to the issue of selling your business. Keep your business afloat, and then we can still look to sell a business. Some businesses will sell in a down market like this. We should expect the market to change. The market is changing. The market has already changed, and there's fewer inquiries over all the listings that are out there, and businesses just aren't moving as quickly as they were before this economy turned down. But businesses will sell in a down market. It's a matter of which businesses to sell, and it's a matter of working out the best sales price and ensuring that you follow a method for getting your business sold. Some businesses, they outperform in a down market like this, a down economy. If you're in repossessions or collections, your business obviously is going to do well. There's more activity. Other businesses are resilient during a down economy. If you've got a beer, wine, liquor store, people are still going to be drinking. If you have tattoo parlors, people for some reason are still going to get their tattoos. Candy, cosmetics, hair salons, thrift stores, home health services are going to do particularly well. Veterinary services are also still going to be resilient through this period. Now, many of these right now may not be in operation because of the home quarantine orders, but once they reopen, these businesses will do fine, even if there's an economic downturn here. We should expect a significant recession in the economy, but businesses like this will do well. So it's going to be an excellent market for these businesses. Their cash flows will compare favorably to others in the market, and there will be buyers out there in the market. So you can create a seller's market with multiple buyers making offers for you. So this may not be the time that you intended to sell, but during a down economy, this may be the optimal time for you to get top dollar for your business. So businesses that thrive in a down economy or resilient in a down economy, this is a good time to revisit that idea of whether or not you should pull the trigger and put yourself on the market for sale. Next category are essential businesses, those which continue to run during the quarantine orders, or call it the shelter in place, or whatever it's being called in your area. We've got emergency orders where people are not going out, stores are closed. There are a broad range of healthcare businesses, from clinics to pharmacies to biotech businesses. All of those are going to do well because they're open, they're essential. In certain types of construction continue to go on right now, particularly public works and those types of businesses. They're essential, they're operating. Real estate operations are going on. Childcare businesses are going. Repair businesses, plumbers, electricians, automotive repair, things still break. Food businesses, if you're ordering out, you know that those businesses are still open. Things that are with delivery or takeout or drive-through. They're essential, they're operating, and they could be easily placed on the market for sale, even though this isn't probably the optimal time for a restaurant right now. Convenience stores, though, are essential, they're operating, and this might not be a bad market for a convenience store. These businesses might continue to generate a positive cash flow. If they generate a positive cash flow, you might compare favorably to other businesses that are out in the market right now. The last category are businesses that just must sell. There could be reasons, age or infirmity of the owner, somebody needs to relocate. For whatever reason, you still just need to go forward with a sale, notwithstanding the market conditions right now. So if you need to sell in this market, you should think of a price range, not just a price, but a price range before you take this business to the market. You need to look to the hard value, the fair market value of the machinery and equipment that you use in your business. What physical assets are you going to sell, and what are those worth? You shouldn't have to go below the aggregate value of those assets. And to justify that as being kind of a floor, it might be worth having the machinery and equipment appraised. That might help the buyer to be able to get a loan for the business. It's more important in this market now. If you're trying to sell during a down market and you're a must-sell seller, it's more important to pre-screen the buyers so that you don't waste time with buyers that aren't serious. You might want to have a streamlined marketing approach that gets right to the chase of what your business is, how it's doing financially, and what you're asking. You're going to hopefully have an accelerated sale process with less due diligence. This should be more accelerated. You should have a quicker time of reaching a decision and closing a deal. One upside is that a lot of businesses out there aren't doing well. A lot of them are not paying their rent. Unfortunately, a lot of businesses are failing right now. If you're coming into your landlord to assign the lease for the space you use, your landlord should be far more cooperative in this market right now than they typically are. With that, I'm David King, and this is Selling Your Business. Stay safe, do what you have to do, maintain the social distancing, keep faith that we can all as a nation get through this, and keep faith in your business that you can stay the course, keep your business afloat, stay with your plans to exit your business, and I'll talk to you again next time. Take care.